Welcome back, everybody. Today we're talking about SCHD. It's the Schwab Dividend Equity ETF. And the reason why we're looking at that today is because it's a position I'm going to be adding to my portfolio. Last week, I made about $5,000 in realized income from trading options. And I want to take that cash and move it into a position that'll generate some passive dividend income over time that will just continue working for me no matter what happens. So basically, this weekend, I got to go window shopping, looking at some ETFs. I wanted to add a new position since I cut Nusi out of my portfolio, so I wanted something to replace that. So my income portfolio is mostly comprised of QILD, Devo, and JEPI, and those give up potential growth in order to generate monthly income. So something I was looking for was something that had more growth potential to kind of offset that. And the big ones I was looking at in the end were QDIV, which is from Global ETF. It's a cousin to QILD, but it does it on the S&P 500. The next one I was looking at was VYM and then SCHD. Ultimately, SCHD ended up winning in my book, but it was actually a pretty tight race. So let's go ahead and take a look at what's going on with SCHD. SCHD tracks the Dow Jones, the US Dividend 100 index. Basically, it's tracking that index, but excludes the REITs. Stocks must pass a few criteria before they're even eligible to be picked to be tracked by the fund. And one of those is that they must have a minimum of 10 consecutive years of dividend payments. So these are dividend companies that have been paying a consistent time for a long time. So they're likely to continue doing so moving forward. Their minimum float must be at least 500 million. So that means that you don't have those micro caps in this fund, whereas VYM would have that in there. And then the minimum 3-month average volume traded has to be over 2 million, which is just nice to know that the stuff that's inside the fund is just very liquid, and it should result in the fund itself being very liquid so that you can get in and out if you need to. Although for me, this could be a long-term hold, so that's not too much of a concern for me. So then what they do is they take all the stocks that pass these criteria, put them in an Excel sheet, and sort by yield, and only the top half of that result is going to be eligible to be in the fund. So it's looking for high yield stocks that fit those criteria. So looking at this ETF comparison tool, here you can see SCHD versus VYM. And you can see that they're very similar in terms of like all the statistics here. So first off, the expense ratio is very low for both, 0.06%. That's cheaper than all the income funds I currently have. So that's basically like free in my book. So that's an insanely awesome expense ratio. Assets under management, pretty similar here, about $9 billion difference here. They're both got good volume. One of the first differences we have between SCHD and VYM is the number of holdings, and that's because VYM has a lot more lower cap stocks that have higher yields in it, so it has more holdings, and SCHD targets a very select few based off that criteria we already talked about. Going down, the SCHD and VYM performance is actually pretty close to each other here. If we look at this, you can see SCHD actually outperformed VYM over the long term, which is kind of why I ultimately decided to go with them. I know SCHD only pays a dividend every quarter instead of monthly, so that's different for my portfolio, but since I'm not actually living off this income, I'm okay with that. The CAGR is actually 15.2% over this timeline, which is pretty cool. Best year is 32%. I assume that's 2020 to 2021, which has been a great bull market year for everyone. And yeah, it's pretty similar. The correlation with the market is actually spot on with VYM, so they both follow the market. If the market goes up, it goes up. And ultimately, I think this infographic here is what made me lean more towards SCHD over VYM. I used to invest heavily in VYM back when I was choosing dividend stocks and before I started doing options trading. So I do have a history with them, but I think SCHD has a greater potential for growth and return overall. As you can tell by here, $7,000 over 10 years here. When you compare the holdings for like the top 10 weighting, you see that SCHD, larger percentage of their holdings are in just 10 stocks, so 40% in the top 10. But if you look at the companies in here, they're all companies that you recognize So you don't mind seeing them all at like 3.8% to 4.4%. And then VYM, you can see they have a lot more companies in their portfolio. And so the top 10 only have 23% of the weight. And that's because, well, quite frankly, they have 400 holdings that they need to spread their money about. So they have a lot of the same overlapping companies. It's just a smaller percentage for those large cap ones, whereas SCHD has a bigger exposure to each individual position. In terms of the composition, you can see the biggest difference here is that SCHD is very heavy in technology and the financials, which are actually two markets that I really do love. And they have no exposure to telecommunications and utilities, while VYM does have telecommunications and utilities. And they both do have similar exposure in financials, but I think those are the big ones you see here. VYM also does have some more exposure to the energy market, but those are the main differences in terms of exposure. So SCHD is actually a passively managed ETF. That's why you have that low 0.06% expense ratio. And you can see that by going to this webpage here and seeing it. And the ETF actually pays almost a 3% dividend yield annually, which is actually pretty respectable for a dividend asset. Over here, you can see they have 105 companies. Again, 40% is held by the top 10 companies in the fund. It's only holding basically America companies, so you don't have that international exposure. If you're looking for that, this might not be the fund for you, but this is looking to capture some of the higher dividend yielders in North America. You can see here, kind of like what we said before, it's looking at the large cap stocks. It does have a couple mid cap stocks in here, and like these small and micro are very small, almost not even worth mentioning. Sector exposure sorted by weight here, and you can see financials, information technology. I think we'll still see growth from informational technology, so I do like that extra 10% exposure that it has over VYM. So here's a little site that'll let you check how your returns would be over time based off whatever ETF you want to invest in, and you play around with whether or not you add contributions to it monthly. And in this case, I'm going to say no, because I'm just going to add this 5,000. I don't necessarily plan on adding to it every month, although that may change as I do some more contributions to my account. So I'm going to go ahead and fill this in, SCHD. Starting amount. I'm planning on buying 5,000 shares $5,000 worth of the stock on Monday. And we've set it for the 10-year, and over the course of 10 years, you can see how this grows. The final value of this 5,000 with dividend reinvestment, it would have grown to 19,000 in 10 years. So would have 4 times in that time. I know past performance is not indicative of future performance, especially since we've had probably the best bull run for a 10-year period since before the bubble in 2008. But it's pretty nice to see that it would have done really well during this time. Annual return is 14% a year, which is just awesome. Let's go ahead and just compare that to VYM, since we mentioned them quite a bit in this video. And you see the final value would have only been just under 16,000 with just 12%. So SCHD did outperform VYM during this time period, which is why ultimately I'm going to be investing in SCHD. So I'll be buying about $5,000 of SCHD on Monday, but that doesn't mean that QDIV or VYM are bad funds. I think both are actually pretty good. All three of them look like they should perform very similarly. VYM and SCHD have a longer track record, so it seems a bit more safer than going the QDIV route, although I hope to see QDIV perform well and maybe eventually pick that up as well. Although I think all three of these funds are going to perform very similarly, so it doesn't matter which one is your flavor, but I think the important thing is that you are continuing to invest in the stock market. Contribute what you can, even if it's just $50 a month. If you can do more, that's awesome. But just starting out, get that habit in, continue to invest, and you'll see that snowball effect happen. And it's just a good feeling when you start seeing those dividends come in. It's very motivating. With that all said, I'm curious what you guys think. Would you prefer QDIV, SCHD, or VYM? Let me know in the comments below. If you enjoy this content, go ahead and hit that subscribe button. And then you can also check out one of these videos, and see you guys next week.